Hi everyone, this is Pete here. Welcome back to the channel. So today we're going to talk about the one important thing that I will do every single year at the year end, and that is make sure I get the maximum tax relief that I can get. Okay, so today we'll talk about how to get tax relief, what should you top up, and how would I prioritize the different top up. Okay, so if you're paying a lot of taxes, you want to reduce that, watch this video. Alright, so firstly, quick disclaimer, none of this is investment advice. I'm just sharing with you what I do as a Singaporean, right? How do I reduce my taxes and what are the mechanisms that I use? So I think most of you who are in Singapore, you will know that at the year end, there are two main things that you can do to reduce your taxes, and one of them is CPF top up, the other one is the SRS top up. So over here, you can see that there are two top ups that you can do. One is to yourself and one is to your family member. So this top up has been increased since last year. Previously, you can only top up $7,000 for yourself and also for a family member. So the maximum taxable relief you can claim is $14,000. Okay, but from last year onwards, they have increased it to $8,000 each. So in total, you can qualify for $16,000 of top up. Then the question is this: hey Pete, what is the limit other than just $8,000 of tax relief? Now, can you top up more than $8,000? The answer is yes. But there is a limit to it, and in short, it is to your full retirement sum. Now, what is the full retirement sum, or called FRS, right? For this year is actually 19,800. Now, this number will increase every single year. So next year it will be 2,000 over, right? And so on and so forth. And for MediSave account, right, the full sum currently for this year is $68,500. So these are the amount of top up that you can do to both your special account and also your MediSave account to qualify for tax relief. Now, why I think topping up your CPF is something that everyone should consider, because it is not just that it adds on to your retirement nest, but one thing many people forgot is that if you haven't reached your first 60,000 CPF amount, I would strongly encourage you to get there, because you actually get a much higher interest rate. So up to 5% over here. And for those of you who are above 55, even better, your first 30,000, you get up to 6% of interest as well. Now, after you have topped up your CPF, the next thing that you can look at is actually what we call the SRS, the Supplementary Retirement Scheme. The current maximum amount that you can top up as a Singaporean or PR is 15,300, okay? Or as a foreigner is up to $35,700. Now, for SRS, there are a bit more different benefits compared to CPF. Firstly, it is way more flexible, right? You can invest it almost like your own cash. There's no restrictions or whatsoever on what SRS can be used for. So you can invest in a wider instrument. But if you do not invest it, guys, the SRS account only pays you 0.05% return. Okay, so if you contribute to your SRS, I would say the smartest choice, or the thing that I will do for myself, is to definitely invest it. So to qualify for the SRS tax relief, you must top up by 31st December. So you must do it by this week. Now, a common question that I receive is, Pete, which tax bracket should I be in before I think about topping up my CPF or SRS? So to me, the way I will look at it is purely depend on what is your income bracket, right? So you can see over here, if you're at 40,000 income bracket, then you are actually paying about 7% income tax. So to me, that is a pretty good return, right? Because every dollar you put into your SRS or your CPF, right, you're immediately getting 7% return, which is pretty good, right? And it's about the stock market returns. And so, of course, if you're in the higher tax bracket, like 11% and above, then I would say for tax relief, this definitely makes sense. Okay, but if you're at 0% tax, or you're at 2% tax, then I would say it really doesn't make sense. You're better off probably taking that money and just put into any fixed deposit. You can get similar returns as well. So over here, I just did a very easy table for you to refer to, right? You can look at, for example, if your annual income is 120,000, you will save about $1,760 of tax savings already, okay? And if you're a high income earner at about $500,000 and above, you are going to see about more than $3,000 of tax relief. And this is just based on SRS, okay? So if you add in your CPF and SRS, your potential tax relief can be almost double of this. And for those of you who are paying a higher tax amount, just take note that next year in the 2024, right, they're going to introduce new tax. So for the $500,000 and above, it's no longer 22%, but 23%. And anyone earning more than $1 million is going to pay up to 24%. So this would really make topping up your CPF and SRS even more lucrative. So for me, what do I use my SRS for? I use all my SRS to actually invest like my normal cash, and I put them in the stock market where I invest in shares of companies. And why do I do that? Because SRS to me is a long-term fund, although it has a flexibility that you can withdraw and pay a 5% penalty, but I see it almost similar to CPF, where in the long run, I want to keep this invested and not touch it at all. Okay, so as a portfolio manager, this is what I also tell my clients, that if you're investing your SRS money in my portfolio, you shouldn't be thinking about, removing them or withdrawing them, because it is not like you can withdraw them without penalty as well. And that forces a very good investor behavior to invest for the long term. Now, why is this important? Because if you look at this chart over here, you can see that if you're investing for 1 month, 1 year, or even 3 years, right, the return is less certain, right? For example, 63% of the time you make money, 75% of the time, 83% of the time. But if you go into the longer duration, like 10 year, 15 year, 20 year, you will almost get 100% certainty historically, where you will get positive return, okay? And the maximum return in this case can range from 21% to 18%, and you will notice the downside, right, of each year is also very little. So when we look at this statistically, right, the highest probability of return comes best, right, in the stock market when you are investing in the 10-year time horizon as well. Okay, so I'm looking at it this way, and that's how I invest my own money and my investors' money as well. And when I invest my SRS, I make sure that I invest in a diversified portfolio. I generally invest about 20 stocks, right? This is to make sure that I don't suffer the volatility, but I'm in it for the long haul, so that I can gradually outpace the market. Okay, now, so for those of you who are a bit more interested in the investment that I do for my client, you can go to this website over here to look out. But this video is not to talk about that, but mainly I just want to share with all of you the main thing about accumulating wealth upfront is also about paying less taxes. Okay, so do look at your own circumstances. Ask yourself whether does it make sense for you to top up your CPF, right, for yourself and your loved ones, and also SRS contribution. By combining these two together, you can easily save up to about $6,000 of tax relief, and this $6,000 can compound for you right into the future, and it could be a much larger sum, right, in many years to come. Alright, so I hope you have learned a lot about CPF and SRS and how to optimize your taxes, making sure that you get the necessary tax relief. Once again, remember, all these tax reliefs are subjected to the maximum cap, which at this point of recording is $80,000 each year. Okay, so for example, if you are a parent or if you are a working mom, you would likely already be hitting $80,000. So it may not make sense in those few years for you to top up your CPF or contribute your SRS. So do make sure you check how much relief you are eligible first before making those contributions. Alright, that's all I have for this video. Hope you all like this. If you like the content here, do like and subscribe. And once again, Merry Christmas, and I'll see you in 2024. Bye bye.